Welcome to the Accountancy Learning AAT Sample Paper Debriefs. In this video, I'll take you through the Level 3 Tax Processes for Business Sample Paper 2 Task 1. This will be based on Finance Act 25. So we're told that a VAT registered trader sold an item to a VAT registered retailer for $1,500 plus VAT of $300. The retailer sold the item for $2,300 plus VAT of $460 to a non-VAT registered business. Now we've got some statements to complete. The VAT registered trader who sold the item for $1,500 plus VAT will include VAT of, and we've got to select as a cost to its business. Now, if they are VAT registered, it means they're going to claim that VAT back. So the VAT will never be a cost to the business when they're claiming VAT back. So 0 would be the answer there. So then the VAT registered trader who purchased it for $1,500 plus VAT and then sold it on for $2,300, again, they're going to be able to reclaim that because they are VAT registered. So they're going to have a 0 amount of VAT as a cost to the business. They don't have to absorb that as a cost to the business. And then the non-VAT registered business who purchased the item for $2,300 plus VAT will include VAT of. Now this time they can't reclaim it because they are non-VAT registered. So we were told at the top it's 460. So that 460 will sit in their accounts as a cost to the business. Part B, identify which one of the following businesses may register voluntarily for VAT. And then it says all amounts stated are exclusive of VAT. So looking at reference material 2, we can have a look at what the registration threshold is of 90. So a business providing taxable services with an annual turnover of 105,000, well, they're over that threshold, so they have to register for VAT. A business making wholly zero rated supplies with an annual turnover of 88,000, so they wouldn't need to register for VAT necessarily. And a business making a mixture of standard and zero rated supplies, and the annual turnover of standard rated supplies is 65,000 and from zero rated supplies is 30,000. So that would be 95 in total, so they have to register for VAT. So the ones that can voluntarily register is those making £88,000 annual turnover. The following 3 businesses operate special VAT schemes. A Limited has been operating the cash accounting scheme for several years. B Limited is a limited cost business and registered for VAT 3 months ago under the flat rate scheme. And C Limited has been operating the flat rate scheme for 3 years and is not a limited cost business. So we've got some true-false statements here. So A Limited does not pay VAT to HMRC until money has been received from their customers. So this is about cash being received. They're using the cash accounting scheme. So therefore, that makes that true. B Limited pays VAT on its gross turnover at a rate of 19%. So B Limited is a limited cost business and registered for VAT 3 months ago under the flat rate scheme. Now the flat rate scheme does not have a percentage of 19%. So they will not pay 19%. So that's false. C Limited has bought one item of equipment which includes £500 of VAT at the standard rate. C Limited can recover the input tax paid. Now C Limited is operating the flat rate scheme and is not a limited cost business. So in the reference material, I'm going to bring up a little snippet about capital expenditure on the flat rate scheme. And it says it can be recovered on individual large capital purchases. So we're told that the £500 is the VAT amount. So that would mean that the net amount is 2,500 So because it's over this £2,000, it means that they can recover the input tax. And then lastly, both B Limited and C Limited are currently entitled to the 1% flat rate discount. So that's only in the first year of trading, which is okay for B, but not for C because they have been going for 3 years, making that statement false. So Daisy Properties Trading has been operating the annual accounting scheme for several years. Taxable turnover for the next financial year ending the 31st of March 26 is shown in the following table. The question asks us to identify the date that Daisy Properties Trading must withdraw from the annual accounting scheme. So, reference material to help us with this. So it says leaving the scheme is compulsory if taxable turnover at the end of the VAT accounting year exceeds the threshold. So we've got a threshold of 1.6 million and it's at the end of the VAT accounting year. So we've got the next financial year ending the 31st of March 26. We've got a threshold of 1.6 million. So because we have to withdraw at the end, we can see that there's 2.28 turnover at the end. So it will be the end of that financial accounting period. That now completes task 1.